That's where I learned how to do accounting. Uh, it was a medium-sized firm. I'd say we had about 30 accountants. Two of the owners were attorneys. We had a couple of other attorneys in the firm. We did a lot of certified audits, a lot of tax returns, a lot of high net worth individuals. And the way that I learned was, and this is the right way to learn, is we had senior accountants that were in charge of accounts, and I was a junior accountant. I had about a year's experience. Okay, I had worked for a tax attorney before that for 2 tax seasons. That was basically just a tax season job where I learned a lot about how to do individual tax returns. Then I worked I jumped around a little because that's just the way it was back then. Worked for a couple of other CPA firms where I learned how to do basic bookkeeping, payroll, and it was the same thing with them. You know, you had somebody above you that was teaching you. But when I went to this firm, uh, and I don't want to say the name of it because I might get in trouble. And I know that there, two of the partners passed away. You know, that was almost 40 years ago. Anyway, so in that firm, I learned how to do real accounting. And what we did was we took the client's raw data. Actually, so back then they actually had checkbooks because they hand wrote all the checks pretty much. Uh, Computers came on the scene about that time, but very few people were using them, so there wasn't a lot of computerization. So everything was done by hand. Uh, and that gave me a chance to look at the raw data, take that information, put it into a spreadsheet, okay, create journals, okay, cash disbursements journal, cash receipts journal. Sometimes we had sales and purchase journals. We might have had a petty cash journal, okay, and it was all done on spreadsheets, 13 column paper spreadsheets, not like an Excel or Google Doc spreadsheet. It was, and I had a lead pencil and an adding machine. Okay, this was old school. And then we took we did the bank recs, okay, from the cash receipts and the cash disbursements by hand, by hand. Uh, and then we took the journals and posted them to a general ledger. From the general ledger, we created what you call a trial balance. And a trial balance is all the different accounts going down in a straight line. And basically, down to retained earnings and up is your balance sheet. And everything below is the profit and loss. Now, the trial balance, so now there's the left side, which are debits, and the right side are credits. This is accounting. They have to add up. They have to add up. So from there, we would create what we call a pro forma balance sheet and P&L. And then we would meet with the client and go over the balance sheet and the P&L so that we could tell them, listen, this is what you're doing in your business. That's how all of our accounts were. There were no exceptions. Smaller accounts brought their stuff into the office and we did the same routine. It's not like that today. It's not like that today. A couple of things happened. Computers became common. The question became, how can we, in the accounting world, how can we use these computers to make our systems better, more efficient? So one of the first programs that we had was Lotus 123. That was before Excel. So that was a spreadsheet program. So right away, we didn't need the 13 column paper ledgers. But we still basically followed the same procedures. We took the checkbook, only now we were putting it into a spreadsheet. Fine, that's fine. Then all chaos broke loose. All chaos broke loose. They created tax programs. So now no longer are we doing tax returns by hand, where you actually had to look at the line. You had to know the form. You had to look at the line. You had to know what the instructions said that had to do with that line. Then you had to know what schedule. So for instance, let's say you had itemized deductions, Schedule A. You had to know, okay, these numbers go here on the 1040 return. If you're doing depreciation, you can't just plug numbers into a computer program. You had to actually look up the instructions for the depreciation. And yeah, we had depreciation schedules by hand. Believe it or not, we got a lot of returns done, a lot of financials, a lot of returns, audited reports, everything in between. So now we have computer programs. I remember the big debate was, should we have the secretaries enter the data and then the accountants review it, or should we just have the accountants enter the data directly into the tax program? So now what we have is we have data entry. We're no longer looking at the forms and the instructions. We're relying on the computers to know what the tax rules are. We're just entering data into boxes, and then we would print out the return and review it. So if you had, so at that time, you've already had experience preparing returns, knowing what the rules are, digging deep into the tax code. Okay, we didn't just guess. We didn't just enter stuff on the tax return. But now we're entering stuff in the computer. But that was fine because we knew what the tax returns were supposed to look like. We knew what the rules were. Then what happened, which really changed the accounting industry, a company called Intuit bought a company called Parsons Technology. Parsons Technology had this software to do business bookkeeping. Intuit at the time had a program called Quicken. It was a personal finance program. So they took Parsons Technology, tweaked it, and called it QuickBooks. And this is what they sold the American business owners on the lie that they could do their own bookkeeping and save money. It shocked the accounting world. All of a sudden, the accountants were going to be replaced by software. Now, what happened the first couple of years, I'd say the first 3 to 5 years, accountants refused to use QuickBooks. So they let their clients do their bookkeeping, but the clients still needed their tax returns done. So the accountants were taking the client's QuickBooks files, and now they have to do accounting. Well, the problem is the business owners don't know bookkeeping. They didn't know how to do bank recs. They didn't know how to enter transactions. So a lot of times the accountant got garbage. They got garbage. Now, good accountants had a copy of QuickBooks. They'd get the client file and fix everything. Okay. Other accountants decided they were going to take shortcuts. They weren't getting paid to do the bookkeeping. They were getting paid to do the tax returns. So they started taking shortcuts. That did not help the client. What I did at that time was I saw an opportunity. I said, these accountants are leaving these business owners high and dry. I put an ad in the paper, QuickBooks setup and training. So I went to clients, and the first thing I did was I would look at their QuickBooks file, and 50% of them, I said, I can't fix this. It's too messed up. It's not worth saving. And a lot of times they were shocked. What do you mean? I entered this and I spent a lot of time. It didn't matter. It wasn't worth salvaging. The other 50% I could salvage. I was able to fix their charts of accounts. I was able to reconcile their accounts. And I taught them how to enter the information into QuickBooks. Most of those clients I got as accounting clients. So now my accounting practice grew because they would say, well, my accountant isn't doing QuickBooks. You could help me with QuickBooks. Why don't you just do my tax return? So I took advantage of that opportunity. That's what the accountants should have been doing. They should have been supporting their clients. But instead, they were letting their clients create garbage and then taking shortcuts, taking that info and taking shortcuts. Preparing tax returns that weren't worth the paper they were printed on. If those clients ever got audited and they had to bring down their books and records, nothing would match. Nothing would match. The first thing the IRS does is add up all the deposits. If they haven't done a bank rec, how could it be correct? Then they're going to look at all the disbursements. That backup has to match what's on the tax return. So right away we have a disconnect. Couple of decades later, all the people like me that learned how to do tax returns by hand are retiring. Okay, the people that taught me are retired. So now you got a whole new generation of accounting students coming into the business. How did they learn how to do accounting and taxes? They learned it on a computer program. They learned it on QuickBooks. QuickBooks isn't even an accounting program. It's a database. It's a database that they tweaked to produce financial statements. Now, the owners of Intuit were marketing geniuses. Marketing geniuses. I think they were the first ones to offer a rebate on software. So you bought, and it was cheap. It was cheap. You bought the software. It was very user-friendly. It had a nice interface. It was easy to get started. It had a lot of bells and whistles. In fact, that's one of the problems with QuickBooks. There's too many bells and whistles. There's too many things that you don't need. But it's easy to enter a bill. It's easy to write a check. It's easy to do an invoice. It's easy to do a lot of things. But if it's not set up properly, you're going to get garbage. You're going to get garbage for financial reports. So I've seen business owners make all kinds of mistakes. All kinds of mistakes. They're happy if they could print a check. They're happy if they can print an invoice. But what they skipped were essential steps. Setting up a proper chart of accounts. Setting up the vendors and what account does that check go into. So they print checks and just pick a category. Sometimes they got it right. A lot of times they got it wrong. The invoices, you got to set up a product or service. And then you got to tell QuickBooks, this is what income account it's going to go to. Then when you get paid and you get the check, there's a process to put the deposit in. So you got to receive the payment. You got to that wipes out the invoice. It's no longer an accounts receivable. You put it in the deposit. Now that deposit has to match your deposit slip. Then you do the deposit into the bank account. Now, what a lot of people would do is they would receive the check and not do the deposit. So that then what happens is it goes into an account called undeposited funds. It's in limbo. It didn't go into the bank account. So if it didn't go into the bank account, you can't do a bank rec. If you don't have a bank rec, all of your numbers are suspect. It's easy to enter a check in QuickBooks, but what if you didn't print it? What if it never went out? There's no verification. So when I could look at somebody's QuickBooks file, and within less than a minute, I could tell them there's a problem here. If there was money in undeposited funds, problem. There's another account called opening balance equity. That's a catch-all account for when they open the business. They put a deposit in. If they don't put it to the right account, loans to shareholder, income, it goes into opening balance equity. So if there was anything in those two accounts, I would say your QuickBooks file needs to be fixed. If there was no bank recs, your QuickBooks file is suspect. Okay, so now we have a bad accounting program that's not even an accounting program. Oh, the other thing that Intuit did, they actually let people copy the program. And I'm pretty sure they knew. They let them do it. They let them pirate the software. Why? Because the more people that had it, eventually they'd be able to force them to buy it. They'd be able to lock it down and force them to buy it, because every year they had an update. And then they would stop supporting the older versions. Okay, so over time it became, so you got tens of millions of people using it, accounting firms, because after about 5 years, the accountants had to relent. QuickBooks created what they called the Pro Advisor program. So they partnered with accounting firms. Okay, so now QuickBooks was no longer the evil, they're going to take over our business, we're going to suffer. Now accountants were actually getting clients from Intuit. They created a database of all their pro advisors. So now clients could go online and say, oh, this guy is a QuickBooks Pro expert, I'll use him. So the whole dynamic changed, and the whole dynamic in accounting changed. And before that, there was a program called Peachtree. That was the most popular accounting program. That program is still around. And that was an accounting program because you could actually close periods. See, there's a lot of flaws in QuickBooks. There's a lot of flaws. You could delete transactions. You can go back to other periods. You can go back to other years and delete transactions, add transactions. So if a client was actually using QuickBooks at the time, I would go in, do the year end. I would always have to check the opening retained earnings to make sure it matched last year's on the tax return. A lot of times it didn't. Then I'd have to find the transaction that they entered with the wrong year. Okay, so there's a lot of problems. There's no more accounting controls. Then you got new accountants coming in, learning accounting on a bad program. And now they're learning how to do tax returns through a tax software program. They're not looking at the instructions. They're not looking at what the laws are. Okay? So right away, you got an issue with quality. Accountants taking shortcuts and people learning how to do accounting and tax returns through software, assuming that the software is going to be right. That's not a good way to do accounting. Another problem, and this is probably the biggest problem facing the accounting industry today, there is a serious lack of accountants. There's a serious lack of tax preparers. Forget about good tax preparers. Forget about good accountants. They are few and far between. Why? Computers. When I went to school, accounting was the most prestigious. If you wanted to be in business, you wanted to have an accounting degree. Why? Even if you don't want to be an accountant, you can get a job in business. You got an accounting degree. It wasn't easy to get an accounting degree. In fact, most people didn't cut the mustard and had to change majors because they couldn't pass one course called intermediate accounting. So they weeded out the people that would never really be good accountants. Well, then computers were created. I have an option. It's more exciting than accounting. I could become a computer programmer. I could learn about computer technology. I could build computers. So people went into computer science. Then the internet, another option. I could do web design. I could do graphic design. I could do database programming. Accounting became not as attractive anymore. Not only that, if you graduated with an accounting degree, this is what you were faced with. Long hours, low pay. Long hours, low pay. That's just the way, and I don't think it's changed. I don't think it's changed. A lot of firms, you got to work 6, sometimes 7 days a week during tax season. If you work with one of the big firms, they're going to take your life. They're going to take you. You might make a lot of money, but you're not going to have a life. A lot of those people that go and work for the big firms get burned out after 2 years and they leave. Their idea is, I'll work here for 2 years, I'll make connections, and then I'll go work for one of my clients. Okay? So now you got less and less people going to school for accounting. You got older accountants retiring. A lot of accountants are taking shortcuts. They're not meeting with their clients anymore, like I had to, because we had to actually go to the client. We had to meet with them and then review their books. If they were smaller, they came into the office and we did the work and then we went over the books. They're not doing that anymore, especially when all this remote stuff happened. It's easy to just sit in your office, get your client's info, get the bank info, do the work, and never even talk to your client. We were called the trusted advisors. We're not called that anymore. We're not called that anymore. So what's the solution? What's the solution? Okay, the accounting industry solution is we're going to make it more attractive for people to become accountants. That'll take decades, even if they can do it, which they're not going to be able to. They're not going to be able to. It's just not an exciting, attractive profession anymore. That's a fact. That's a fact. There's a lot of other options young people have. And accounting is probably low on the list. Low on the list. Okay? The solution is overseas. Okay? I found people in the Philippines that are hungry for work. They love to learn. They have a very good culture. They're family oriented. They're great accountants. They're great accountants. I learned that. About 3 years ago, I started hiring them. And it changed my accounting business. I have Philippine CPAs, financial advisors. Okay. They took one of my courses, How to Prepare Tax Returns. Their first tax season, they were doing tax returns. All of our tax returns get reviewed. So we have an accounting specialist, they do the tax return, then the team leader reviews it, and then it would come to me and I would review it. There were less and less mistakes. You see, when they made a mistake, I would go through it with them and they wouldn't make the same mistake again. They wouldn't make the same mistake again. Today, this tax season, I don't even review returns unless there's some kind of complicated issue and they come to me to that's after they only worked one tax season. One tax season. My most senior person has been with me 3 years. When I first started, you would have to work 5 years before you could get to that level. How is that so? Because they are hungry for knowledge. They will work overtime just to study tax laws because they want to do U.S. taxes. That's the solution. Right now, it's the Philippines. There's other countries that are available. But if you're an accountant and you relate to what I'm saying here, I highly, highly recommend that you look at the Philippine community. If you want to know how to do it, you can feel free to reach out to me. And this is how you reach out. Just go to timewithjoe.com. If you're a business owner and this resonates with you, if you're a business owner and you can't get on the phone with your accountant, you need to book an appointment with me. Okay. Accountants are not available to their clients during the most important time of the year. The most important time of the year. If you're looking for an accountant and you're not going to be able to find one, if you're looking for one now, good luck. If you need to hire a new accountant, book an appointment with me because we take on new clients all the time. Why? Because we have a system. And it's the same system that I learned 40 years ago. We do accounting. We use software, but the software is just a tool. The software is just a tool. See, my people learn how to do accounting the way I learned. The way I learned. I teach them how to do research, how to look at the forms, how to look at the instructions. I specifically tell them, you're not going to learn how to do tax returns by entering data into the tax program. That's not a way to do it. So now I'll be doing a series of these accounting issues. I call them the top 5 problems and what the solutions are. The 5 top things you should be asking your accountant. The 5 top things your accountant should be asking you. And so on and so on. But I'll be doing a bunch of these. So If you're watching, thank you for your time. If you're not watching live, you're probably watching the recording. And I want to say thank you. I see a couple of hearts up there. Thank you for the hearts. Thank you for the support. And God bless. And I will talk to you next time. Thank you.